Hey everyone, welcome to Stock Talk on July 24th. So in the past Stock Talk, I mentioned a series of higher highs and higher lows on the S&P 500 daily time frame, and now it's becoming a pretty predictable pattern in that we go up, come down a little bit, get above the 20, go up, come down a little bit, get near the 20, and now we're pushing another all-time high. We made a new all-time high today in S&P 500 as well as Nasdaq. So this market continues to be bullish until it isn't. And like I said, like a lot of you all know, follow the trend, right? Don't fight the trend. Let the trend do its thing until we see a possible reversal area. So far, we don't see a reversal, so it's not worth, in my opinion, to guess at where the possible reversal may be, because like I said yesterday, in yesterday's Stock Talk, 9 out of 10 times guessing at a top will be wrong. Okay, and that's that. Following the trend is much easier, and that's just my opinion. I think swing is much easier than trying to guess and trying to short these small moves. If you just think about this, the major trend is up, right? So if you didn't enter at the right time, let's say you entered on this candle and you held it, you eventually got some profit. But let's say you shorted over here and was wrong, or shorted over here and then was wrong. There's many more times in which you can be wrong by shorting in an uptrend versus the other side. Okay, so just some factoids for everyone, or opinions. So what are we looking at for the near future? We're still looking for this pattern to continue out until it doesn't. So that's what we have right now. All right, let's take a look at the TVIX, or volatility. So when we look at TVIX, this is still on a downtrend. Again, these patterns are becoming more and more predictable. This pattern will shift in the future. It hasn't shifted yet. So right now, it's again making a series of lower highs and lower lows. Today we made another new low for TVIX, which means that volatility is dying down, and we'll just let that be. If volatility is drifting lower, TVIX can, or even if volatility is stationary, if the VIX is stationary, TVIX can still move lower. So that's just something to keep in mind. But right now, there's not much bearish action, and just leave it to the bulls to take the market up, which is pretty good. Crude oil. So here's the crude oil mentioned on this fact here. Here are daily candles for crude oil. We have several moving averages curving down here, which shows at least the importance of the moving averages, especially when they're getting converging next to each other. They're so close to each other. When you look at the percentage points between the moving averages, it's very slim, which shows us that this 1.4% gap is very important. And I think closing over those moving averages is the first step for crude oil to be bullish. Hasn't done so yet. We tried it today off of the inventory report and failed off of those moving averages. Doesn't mean we can't go back up, but we need to see it done first to, I think, find that move back up again. Again, your support levels at 55.70 short term, and then your major support levels around 54.30 if crude oil does make another plunge back down. So we'll have to watch those two levels. Getting above the resistance puts us to around 61.30 as the next big major resistance. For natural gas, we have right now a declining pattern. We're still at pretty predictable pattern here too. Rejections off the 50, which is the blue line, and then off the 20, off the 50. This has happened repeatedly in the past. Off the 50 again, and then off the 20 recently. So this is still on a downtrend, and look for the next support level if we can get down there at around 2.131. So right now, natural gas just doesn't have a catalyst for it to pop higher. Well, I still think it can. It's just that we don't see any signs of it. It's just following the trend, and that typical trend of a rejection. So that's natural gas. And I forgot to do gold futures yesterday. So here's some levels to watch for gold futures. If I zoom out here, you can see a major resistance at around 1478.4. That's one area of resistance. But then you also have a support level over here around 1416. That actually corresponds to the 20-period moving average as well. So this is still consolidating. What you can see here is we tried to move and break out of this pattern, but it rejected the next day. So this is still consolidating. This is still looking rather bullish for gold in the long, or not long term, but let's say a few days ahead of us. But if it's still consolidating, you know, that's healthy for gold. So we'll see how this plays out, but this pattern looks okay. And let's take a look at your comments. So Rico, nice to see you. Hey Rico, nice to see you as always. I think you've been here for a year almost since I started these videos. All right, so Rico, let's tackle your comment. I'm looking to buy AMD very soon. Looking for a good entry point. Yeah, it's tough, right? For AMD, we have a downsloping trend line that's supposed to be resistance. And instead, we are moving over that resistance. If we can get over that resistance, that would be a great trend to break, and this would be quite bullish for AMD. So again, this stock right now looks pretty sound. We're over the resistance. I think we even closed over it on a weekly time frame. Let me just take a look. Yeah, so as you can see, we closed over it, and now we've kept over it for a couple of weeks. So I agree with the idea of an entry area is hard to say, right? It's because here's the 20 that's curving higher. We can still come down and test around $31, but the price is moving higher and flying away from it. It's a tough one to say. So yeah, that's AMD. I like the chart. Good job. And then finally, long on SD, I entered a short position on Qualcomm today. What my take was on it for a short position on Qualcomm, assuming a breakthrough the 50-day moving average. So here's the deal with Qualcomm. Shorting the market is tougher than going long the market right now. That's just my opinion. The reason here is if the market is bullish most of the time, then a ticker like Qualcomm might not fall as easily as if the market was pushing lower. So, you know, today we broke an all-time high for the S&P 500. Qualcomm did rally 2.36%. You just got to ask yourself whether shorting is the best opportunity here for this stock. While this is not the, you know, when you look at this range, right, it's not the prettiest range in the world. You can't see too much out of this range. Well, why is that? You can see that we have gaps, right? We filled this gap here. That was resistance. But then, like you said, we have moving averages below us right here, right? So we have a little bit of support over here that's attempting to form. And then we have some more support levels over here, around 69.60, around that vicinity. So it's difficult to say which way, but given market direction and, you know, where the direction might be heading in the next few days, it's difficult to short a company, especially given this sort of pattern here, when it's like, you know, here's the higher end of the range, here's the lower end of the range, we're stuck in the middle. So that's my opinion. Thanks everyone for watching this video. Have yourself a great day, and I will talk to everyone again very soon. Be sure to hit the thumbs up button if you enjoyed the video, and subscribe to this channel. A lot more content, others in the Facebook group as well, so you can click on the Facebook and join that group. Appreciate it.